Hello all, welcome back. Hope you're having a nice Friday. First of all, let me thank you for your continued support. I'd love to see you on Discord as well. We already have a few people there. If you want to join, you can find a link in the description box below this video. And please come over. And we are talking about all sorts of investing topics, very interesting stuff. And you can be one of the first to know more things about the new software that I'm developing. And it's gonna be given out for free for Discord people, Discord followers, and the YouTube subscribers for a long time while I'm testing the software. Exciting! And I hope I can help you with your investing by providing all sorts of information and all sorts of details about companies, mutual funds, index funds, everything really, just to help you with better investment decisions based on the principles that we're discussing in this channel always. And today we're going to talk about a company that I talked about a month ago. I think it was like mid-December or so, more than a month ago, a month and a half. Company's stock price back then it was around $19. Right now it's about 10, I believe, at least pre-market. That's the pre-market price. We'll see how it opens up tomorrow. But what happened here? Robinhood shares tanked 15% after it loses active users, forecasts weak revenue and weak guidance, which is basically the forecast of what's going to happen next quarter, is poison for investors. They really hate that, and it can really affect performance of after earnings really. And so Robinhood anticipates first quarter revenue of less than 340 million, which is down 35% compared to 2021. That's a massive difference. And you see here what Wall Street expected. And monthly active users also fell to 17.3 when compared to almost 19 million in the third quarter. So very interesting things. And I'm also adding a link to the description, link to the video that I created about a month and a half ago, the previous one, in which you can look at the analysis that I did over there and see that we kind of projected what's going to happen potentially with this company just because it's overvalued, and you cannot avoid talking about it. And eventually all these companies that are overvalued, or at least the majority of them, this can come to haunt them, because the slightest miss in guidance, slightest miss in revenue, slightest miss in gross profit, anything really, can really hurt them, and the market can really punish them just because they have gained a lot without having proven themselves in terms of free cash flow, which is key, very key. And we can take a little bit of a closer look at this video on why that happened, in order to understand and use this kind of information for your next investments, in the future investments. And also discover whether it's a potentially interesting buy right now for us to enter Robinhood after it's down more than 50%, actually not more, a little bit less, probably more than 40% since the last time I actually made a video about it, which is about a month ago. It's insane how much it fell, how quickly. And let's take a little bit of a closer look at the financials just to discover what's going on here. So the income statement of the company, see what's going on here. We obviously don't have too much data because the company is a new IPO. That's another problem. I like companies that have at least like 4 or 5 years of data, because then I can see how they're progressing over the years. So over here we're a little bit limited because again this is a new IPO. Still we can see that the company seems to be growing in terms of revenues, but they projected that the revenues are going to slow down, right? That's what it says here. So forecasts weak revenue. So obviously the street didn't expect that, especially based on 2020 when the revenue was actually enjoyed high growth over here, and same with gross profit. And you will see over here that the net income of the company, regardless of the profit and the growth of that profit, is very weak. It's actually negative $3.2 billion in the last 12 months. That's a lot of losses really. And so you may be wondering, if the company has so many losses, how are they funding their operations? And I can show you how. Let's take a look at the overview tab over here and take a look at the outstanding shares. So you see over here there was a massive influx of stock. Now lately, again this is a very new company, so you are noticing months here, it's not even a year, but you'll see there's a pretty substantial print of new stock over here. And we're gonna be seeing that the company is also getting debt. So it's a combination of funding themselves through stock and debt. So let's take a little bit of a closer look now at the balance sheet of the company, see what's going on with their assets. And I just wanted to point to the total equity, which seems to be increasing. And that can be a little bit deceiving. Now, what's happening? So the company is actually losing money and somehow the assets are increasing. What does that even mean? Why does that happen? And you can see why that happens. Look at this line, additional paid in capital, 99 million, 134 million, 10 billion over here. And what is additional paid in capital? It's basically stockholders' capital. It's stockholders paying for stock. And this is what's funding the operations of the company. Now, do you really want to hold a company that's funding operations through stockholders or through the earnings that the company makes and the profit that the company makes, the net revenue, really, the net profit? So, let's take a look at cash flow. You see the whole story here. Again, we know about the net income, but cash from operations used to be positive over here, but then turned negative in the last 12 months, which is not great. Lots of competition entering in this space. And what is really the proprietary thing that Robinhood does? Apart from the fact that they are not charging for trades and they affected the whole market, all sorts of brokers from Schwab to interactive traders, pretty much everybody, e-trade, have zeroed out the cost for a trade. So it used to be, I remember it used to be like $2 or $3 for Schwab, and then all of a sudden they went to zero because of Robinhood competition, which can be great for investors, but is it great for the company really if they have to compete against behemoths like Schwab? I don't know. So, cash from financing, and this is where the whole story can be told over here. Look at 2020, 1.2 billion. Look at the last 12 months, 5.2 billion. So how does that break down? Issuance of common stock, 2 billion over here. Look at that. Total debt issued, 5 billion over here. So the last 12 months have been a massive issue for Robinhood because they have issued a lot of debt and issued a lot of stock, which is both of these things are terrible for investors. Investors generally don't want that much debt, and they don't want to have more issuance of common stock because they get diluted. So their stock is actually worth less right now because of that. So that's very problematic. And you can also see it here in solvency, for example, that the debt keeps increasing really here. So this is another very interesting thing. And the way this goes, it looks like the company will continue with increasing its debt over the years because they just don't make enough cash flow. Again, cash flow was in the negative right now in the last 12 months. And so we have a company that's valued at $10 billion, has a lot of debt, is issuing a lot of stock, and they don't make any cash flow. I mean, they did make some cash flow here, but they're now in the negative. So I don't know how to judge this. If they actually turn back to what they were making here, they can probably be okay. But this last 12 months worry me, especially the extra debt. And again, because this is a broker and there's not many proprietary things, it can go out of fashion. And I'm a little scared about this. I do love the cash flow here, and if they actually turn back to these numbers, maybe they can. Actually, they probably will do much better if they actually are able to turn back to these numbers. But the fear of lessening their revenue, makes me think that they won't be having as much free cash flow again in the next year. So it's worrying. So how would I handle Robinhood right now? Well, it's kind of a bet. I mean, you could potentially enter with a little bit of stock here, just to see if the company will manage to obtain some free cash flow in the next few years. But I have to say that it's a little bit worrying to me again that the fact that the company is facing potentially lots of competition and facing lower revenue could really affect their bottom line. And so I'm a little bit scared about entering this stock right now. I think there are better opportunities that people could follow with, and maybe buy some other companies that we are talking about in this channel. So especially after the fact that this is probably going to be less than $10 very very soon, looks like, at least, because after market and probably pre-market tomorrow it's gonna be about 10 or maybe even a little bit less. So yeah, that's what I wanted to talk about in regards to Robinhood. Be careful about entering it. If you are holding the stock, maybe it's worthwhile holding it a little bit more and see what's going to happen, because you have already lost a lot, more than likely. So I don't know how worthwhile it is to sell right now. But overall, I think I would avoid adding to a portfolio right now, unless it gives me a massive discount. If it gives me a massive discount of like $5, somehow it reaches it's not impossible. If it reaches $5 or something of that sort, then I would be more comfortable with getting a lottery ticket, which is more or less what this company is about right now. It's kind of a blind test. I don't know what's gonna happen, and I'm not very confident based on what I'm reading in terms of data and the projected financials for the next year. So yeah, that's what I wanted to talk about in terms of Robinhood. If you enjoyed the video, please subscribe and like it. And if you did like this one, take a look at this video that I made, and it is about Alibaba, a company that I think is a very interesting one to check and potentially enter, because I believe it's undervalued, and examining the financials in detail in the video that I'm adding a link to below in this video. And thank you for watching, and I'll see you in the next one. Bye bye.